Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of AMC Entertainment, ticker symbol AMC. And so here we are looking at the weekly time frame. These are the weekly candles now that we have closed the week on Friday, February 23rd, closing it at a price of $4.44, barely being green on the day. But, being up from a couple weeks ago, so I do think it's looking pretty good. Even though over the course of the week, price did go down just over 8%. Over the past few weeks, price has gone up more than 10%. So I do think that is good. I do think that there's a lot to be thankful about as far as the price action this week, because I do think that we returned to a pretty key level that I do think will be acting as support and serving as a launch pad as we move our way into the week with earnings coming up on Wednesday, February 28th after hours, which I will be streaming on the channel. So make sure you tune in for that if you'd like to join. We'll be eating popcorn, drinking some champagne, should be having a good time. But yeah, looking at the chart here, what we can see from a few candles ago, a few weeks ago, it does look like we did put in a bottoming signal with this big wick down hitting a low of $3.58.5. Since then, we have said goodbye to the threes. We have been trading in the fours, and so I think that's really good. A week ago, we did put in a high of $5.05, so tapping into the $5 range. I think that we'll be closing next week in the $5 range. Now that we have cooled off a little bit, I think that we've got a lot to, move us forward into the earnings week. And speaking of the earnings week and this past week that we've had, I'm just going to switch over to the daily time frame so we can look at the price action over the course of the week and look at some of these levels that I've drawn that should be offering some guidance for us in the week and weeks ahead. And so looking at this, what we can see, what stands out to me at least, is that this candle that we put in for the day on Friday does look like a spinning top, which could be suggesting a reversal is around the corner. And with that, we did see this wick or the tail coming down from the bottom of that candle that hit a low on the day of $4.28, piercing this 50% retracement level from this Fibonacci. That is at a price of $4.31.7. I think it's great that we wicked below that and closed above it. That does suggest to me that that level could be acting as support. Also, I think it's pretty important that we did close above this parallel channel that I drew at the beginning of the year and that we have traded in for a good amount of time, although we did break above it back here, and just recently we were trading below it. I think the prices that we were seeing below that trend line, below that channel, I think they were at a discount. And so I do think that, we won't be returning to below $4. I think that following earnings will probably be up in the fives. And with that, having returned to not only this 50% retracement, but also the bottom side of this channel, and putting in this spinning top signal that suggests we're at a bottom, I do think that we could be launching up to $4.81, marked by the orange line here, and ideally closing the week above $5.05, which was the previous high that was hit on February 15th. Also, I do want to note that the last video that I put out was last Friday on February 16th, and I had suggested that it did look like we were putting in some topping signals here with this big wick up, not getting another close higher than the previous close or, above that high. That does suggest that buyers were not stepping in at this high, and that is why price dropped. So, as we do move higher, which I do think we will over the course of next week, it will be good to see closes above the close that we saw on February 15th, which was at a price of $4.89. But especially, we want to see not only one close above $5.05, but we want to see two. That will serve as confirmation of moving higher. And I do think that we will see that next week. And there's one big reason why I do think we will see a lot of upward price action in the next week or two. And I'll go over that in just a minute. I do just want to go over some levels to the downside just in case. And so one of those from this retracement, that would be the 618, and that is at a price of $4.14.5. I do think that we might see a wick down to that level, or potentially $4.07, marked by this yellow line, which is based on the opening price on January 17th, and that level did serve as support over here. So I do think it could be serving as support again. And, with that, if we do see price coming below this downtrend, below this channel, I do think it's good to make sure that if it does break below, that we see confirmation of the break. And so that means if we see one close below this downtrend, perhaps if we see a close at a price of $4.14, that could be a fake out. And that's a fake out because we need to see two closes at or below this trend line. And so if we see one close below it, we might see the next close back in the channel. But if we see another close below that low that was hit on the previous day, that is confirmation of the breakdown, and we might be seeing price going lower. And so levels that I do think it could go to if we do see a breakdown. One would be this downtrending level that had acted as brief support over here, and that could coincide with the 786 retracement at a price of $3.89.9, $3.90. So that could be a great dip buying opportunity if we do break below this downtrend. But I suspect we will see a fake out at worst and just testing right around $4, $4.07 before bouncing back into the channel the following day. And so one of the reasons why I do think we will be seeing some bullish action in the weeks ahead is because of this purple line. And so if you look at the chart, you might notice it potentially looks like we are putting in an inverse head and shoulders with the left shoulder here, the head here, and potentially we are forming the right shoulder over here. And so with earnings coming up on the 28th, I could see some volatility to the upside that could bring us back to this purple uptrend or this level marked in green at $5.17. And so if we're getting back to that level, that could be the formation of this inverse head and shoulders pattern. And with that, we can take a measurement from the bottom of the head here, the top of the head, however you want to think of it, to the neckline. And so we get that measurement. And so that is about a move of $1.35. If we take that and move it to approximately where we would be breaking above that neckline, and there we could get an idea of where price would be going from that measurement, and that would be bringing price to right around $6.50. So I'm thinking that we will find support where we're currently at, right around this Fibonacci level. I think we will find that we have support there. We will bounce and we will test these levels to form this inverse head and shoulders. That could be bringing us in the near term to $6.50, blowing past the $5 range, getting into the sixes, before later moving higher to test $8 a share. And so I am feeling really good about the stock price. I'm feeling really good about earnings. I'm really excited to stream it, and I'm looking forward to you all joining. I will be posting a link to that later next week, and I am, just looking forward to it, and I hope you guys are too. I hope you're excited for the dip buying opportunity that we're experiencing now at a price of $4.44. I think we're going to be bringing price to $6.50 in the next week or two. And so I don't want to be missing out on this discount. I hope you don't either. And those are just my thoughts. And if you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.